Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel we review stock markets and discuss financial news, market trends and economic data from Wall Street to Global Street. So let us get started. U.S. and global stock market indices scaled new highs as investors remained focused on corporate results. Earnings from big banks and financial services providers and other leading companies surpassed market expectations, powering a market rally on Wall Street. Economic reports also supported improving market sentiment, providing additional fuel for the 8-week-long rally. Let us review key economic releases of the week, and we begin with the U.S. Consumer price inflation in the U.S. accelerated for the second consecutive month in June, the highest level since February. The annual inflation rate increased to 2.7% from 2.4% in May, and core inflation rose to 2.9% from 2.8%. The increase in inflation was driven by faster price increase in food, used car prices, and transportation services, and a smaller decline in energy prices. However, shelter or housing cost inflation eased slightly to 3.8% from 3.9%, but stayed elevated. The producer price inflation, which is a measure of wholesale prices, eased as businesses worked off the inventories and struggled to win new orders. On an annual basis, the producer price inflation slowed to 2.3% from 2.7% in the previous month, and the core index slowed to 2.6% from 3.2% a year ago. However, inflation is likely to pick up in the months ahead as businesses pass on higher tariffs to consumers. The effective tariff rate on the U.S. imports has jumped from 2.4% a year ago to close to 9% in June, and the U.S. Customs collected a whopping $27 billion in tariffs compared to mere $8 billion a year ago, nearly four-fold jump. In 2025, the total tariff collection is likely to cross $300 billion, a record high, and above $400 billion in 2026, sharply higher than the $77 billion in 2024. And tariffs are still rising, potentially reaching to close to 20%, meaning more pain ahead for businesses and consumers. Despite the trend of rising tariffs, for now, consumers are showing no signs of backing off, and retail and food services sales advanced in June, higher than the inflation rate. New home construction rebounded in June after dropping to a 5-year low in May. Private home building rose to 4.6% to a seasonally adjusted annual rate of 1.32 million, but still 0.5% lower than a year ago. So the home building rebounded on a monthly basis by 4.6%, but annual rate was still 0.5% lower. Elevated mortgage rates and affordability rates are negative, impacting home construction. Permits for future single-family home construction dropped to more than 2-year low last month, reflecting downbeat sentiment among home builders as new home inventory is at levels late 2007. Despite the new housing market accounting for a smaller share of economy, but the protracted weakness could spill over to the broader economy because the weakness in housing market also means weakness in the furniture and appliance industries and other related industries. Across the Atlantic, producer price inflation in Germany declined for the 4th month in a row in June and fell at the fastest pace since September 2024. The overall decrease was largely driven by lower energy costs, which fell 6.4%. The annual inflation rate in the UK, the highest in 18 months, and increased from 3.4%. So the annual inflation rate in the UK jumped to 3.6%, the highest in 18 months, and up from 3.4% in May. The main upward pressures came from transportation prices, which increased by 1.7% compared to 0.7% rise in May. Food inflation climbed to 4.5% and rose at the fastest pace since February of last year. However, housing and utilities inflation eased slightly to 7.5% from 7.7% in the previous month, and services inflation stayed at 4.7%. In Asia, investors welcomed China's second quarter GDP growth data, but the weak updates on retail sales, property prices, and fixed investment kept investors' enthusiasm in check. China's GDP expanded at an annual pace of 5.2% in the second quarter, slightly lower than the 5.4% increase in the first quarter. For the first half, economy expanded at an annual pace of 5.3%, confirming that China's economy is resilient despite the threats of monster tariffs. The 5.2% growth in the first half was driven by consumer spending. 52% of the growth in the first half in the economy was driven by consumer spending, with the exports contributing only 31%. Despite the Trump administration's efforts to stem the rise of flow of goods from Chinese makers, China's accelerated in June. The exports surged 5.8% to $325 billion. Imports advanced a little more than 1% to $210 billion, driving the trade surplus higher by 14% to close to $115 billion. Exports in June accelerated from a 4.8% increase in the previous month. China's trade surplus widened to $115 billion from close to $99 billion a year ago, and the trade surplus with the U.S. expanded to $27 billion from $18 billion in May. Japan's exports declined for the second consecutive month in June, according to the data released by the government. Exports fell 0.5% from a year ago to 9.2 trillion yen, driven by an 11% decline in exports to the U.S. due to the weakness in exports of automobiles, parts, and pharmaceuticals. Shipments to China declined 4.7%, but increased 3.6% to the European Union and advanced 4.9% to the ASEAN region. So far, Japanese exporters have been avoiding a sharp increase in price hikes by discounting exports and absorbing high tariff costs. Imports advanced mere 0.2% to 9 trillion yen from 8.8 trillion yen in the previous month, reflecting the impact of stimulus measures announced ahead of the Sunday's election. The trade surplus in Japan shrank sharply to $153 billion from $221 billion a year ago and rebounded from the deficit of $638 billion in the previous month. Japan's overall consumer price inflation in June eased to a 7-month low, and core inflation dropped to a 3-month low. Consumer price inflation slowed to 3.3% from 3.5%, marking the lowest level since last November. The overall inflation cooled, but the food price inflation rebounded to over 7% from 6.6% level in the previous 2 months, and electricity prices rose at a softer pace of 5.5% compared to 11.3% in the previous month. Japan's core inflation, which excludes food prices but includes energy prices, matched the overall inflation rate of 3.3% following a 3.7% increase in the previous month. India's retail inflation in June dropped to the level last seen more than 5 years ago after food inflation turned negative. Consumer price inflation eased to 2.1% in June from 2.8% in May and fell to the level last seen in January 2019. Separately, India's wholesale price inflation eased to negative 1% from 0.4% in May and turned negative for the first time in 2025. The latest labor market data showed that the UK's jobless rate increased slightly after a period of stability, but wage growth is slowing. Jobless rate inched up to 4.7% in the 3-month period to May, and regular wage growth slowed to 5% from 5.3% in the previous month, meaning the job market in the UK is cooling but definitely not collapsing. Moreover, the company payrolls declined by 41,000 in June, and the May's payroll decline was sharply revised down to 25,000 from a whopping 109,000 in the preliminary estimate. Over the year to June, during the first year's administration of the new Labour government, the UK's payroll shrank by 178,000 to 30.27 million. In other market-moving news in Asia, Japan is likely to face political turmoil after the upper house election on Sunday. The ruling coalition is likely to lose its majority in the House of Councillors, which would further put additional pressures on the bond yields and drag down the Japanese yen. Let us review key events in the global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury edged up to 4.44% as investors debated interest rates outlook amid rising tariffs. Texas crude oil prices fell 1% to $67.30 a barrel after mixed U.S. and China economic data offset worries about the new EU sanctions on Russian energy exports. Natural gas prices in Europe decreased 5% to 33 euros 60 cents per megawatt hour, driven by a rebound in supply from Norway, increased wind power in Germany, and easing of Asian demand. The euro hovered near the 2021 high at $1.17 amid persistent worry about the U.S. trade policy. The yen declined 1% to 149 against the U.S. dollar after inflation stayed above the Bank of Japan's target rate for the 39th consecutive month, supporting expectations that the central bank may tighten monetary policy. Let us shift our attention to major stock markets in the U.S., Europe, and Asia. The S&P 500 index and the Nasdaq Composite gained more than for the fourth consecutive week amid earnings optimism and strong economic data. European markets advanced for the second consecutive week as positive corporate results dominated news flow. The Nikkei 225 stock average rebounded 1% ahead of the House of Councilors election and tracking gains in technology stocks in New York. Hong Kong and China indices extended weekly gains after China's economic data confirmed resilient economy despite high U.S. tariffs. India market indices declined for the third week in a row amid rising global trade tensions and weak start of the earnings season. We now shift our attention to merger deals, market movers, and earnings updates from leading companies last week. Canada-based Couche-Tard dropped or rather abandoned its $47 billion hostile bid to acquire the Japan-based 7 & I Holdings, the parent company of 7-Eleven. Chevron is likely to proceed with its $53 billion acquisition of Hess after the company won an arbitration with rival ExxonMobil linked to the oil field stake in Guyana. The arbitration panel rejected ExxonMobil's claim of its rights of first refusal to buy out Hess's share of the field. Netflix said second quarter earnings advanced because of an increase in the number of members, increased advertising revenue, and higher membership pricing. American Express said the increase in second quarter adjusted profit was driven by increased card member spending, higher net interest income, and continued strong card fee growth. Interactive Brokers reported second quarter adjusted earnings increased 9% after commissions revenue jumped 27% and trading volume in stocks and options advanced 31% and 24% respectively. Charles Schwab reported better than expected second quarter results and core net new assets rose 31% to $80 billion. BlackRock reported second quarter results and assets under management increased to $12.5 trillion despite a $52 billion outflow of a lower fee index fund by the Reckitt Benckiser Group agreed to sell its essential home business unit to Advent International for $4.8 billion and retain a 30% stake in the business. Saab, the Swedish defense company, jumped 11% after the company reported strong results in the second quarter. Burberry Group reported revenue in the latest quarter fell, but the same-store decline dropped considerably from 21% to down to negative 1% in the latest quarter. ABB reported strong quarterly results, and the new orders in the U.S. rose 37% because of the rising electricity demand to support the AI data centers. In the week ahead, earnings take the center stage, and about 300 U.S. companies are scheduled to release earnings. Investors are awaiting results from Alphabet, IBM, Tesla, Intel, AT&T, Verizon, Lockheed Martin, Raytheon, Texas Instruments, and Coca-Cola. On the economic front, durable goods orders are on tap, and new and existing home sales are likely to show modest increases in the last month. In Europe, the European Central Bank is widely expected to leave rates unchanged. In addition, Germany, France, and the UK are scheduled to release their manufacturing industry surveys. On the earnings front in Europe, investors are awaiting results from UniCredit, SAP, LVMH, Nestle, BNP Paribas, Volkswagen, Deutsche Bank, Deutsche Börse, Lindt, Moncler, Informa, Reckitt Benckiser, Dassault Aviation, Dassault Systèmes, and Thales. In Asia, the People's Bank of China is expected to hold rates for 1-year and 5-year loans. Japan's upper house election may signal more political turmoil, and Tokyo area inflation is likely to stay above the central bank's target. In addition, India is set to release its infrastructure output data this week. You can review daily U.S. and global financial market news, stock movers, earnings releases, SEC filings, and economic updates on ticker.com and 123jump.com. You can find the latest financial books on dodera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will see you